Welcome back. You're listening to the Market Day edition of the Country Viewpoint here on Flow FM. And we're getting the show on the road today by speaking with Andrew Partridge from Michell Wool to get an understanding of what the wool markets are doing right now. Andrew, lovely to have you back with us. How are you?
Very well, thank you. And thank you for asking, Alice.
Well, Andrew, a small reduction, but I guess these things happen sometimes, particularly in the current climate. It's probably not the most devastating of blows given what we've seen over the last 4 sort of months, but a little bit of a disappointing week.
Yeah, it is. Yeah, it's little green shoots towards the end of the week, Alice, but you pretty much banged on the head there. EMI is just down 4 cents for the week. Yeah, 11.27. It's plumbing low levels as we've been describing over the last few weeks, and in US terms, we're sitting 20% below the same time last year. So the picture is, like you say, demand is weak overseas due to various economic reasons, as is well published. And wool, obviously, being a discretionary product, it doesn't, we don't live by it and need it day to day. So unfortunately, expenditure's down. So the products like wool products are down, and as a result, prices are lower. But in saying that, towards the end of the week, and not a good visual for our radio listeners, mate, but if you look at the West Australian quote, we had a bit of a bounce in the market late Wednesday. Currency dropped down through the day, and it looks like there's a bit of greasy business done overseas, in particularly China, with the drop in the currency. So ignited the sale rooms a little bit, and actually by the close of the day, and of course WA being a bit behind us on the timeline, their quotes actually closed a little bit above ours. So I can actually, for the first time in a few weeks, predict a stronger market next week. How about that?
There we go. Well, you've given a prediction before I've even asked for one, which I'll definitely take. The crossbreds holding up their end of the bargain, though, Andrew.
They have, yes. So we're looking at 28 market indicator up 5 cents this week, and it's actually, for some reason, the last 2 weeks, I just remember that number bobbing up every week. I don't know if people can remember, the 28 market indicator got back to sort of around 300 cents, and the graph there every week since about May, June, or June even, it's been going up 5 cents a week, and now we're at 350. 30 market indicator up 18 cents, 335. So that broader end of the market's still quite good, and 32 market indicator up 15 cents to 280. So he's had a good run. The 32 market indicator is probably nearly one of the better indicators in the wool market at the moment, even at that low base.
All right, what about the falling Australian dollar? We've seen a lot of reporting being done on this in ag circles over the last few days. What does it mean going forward?
Certainly helps. Yeah, it certainly helps us, obviously, because the majority of wool's trade in US dollars, so a lower dollar, it helps. But as we always say, it's supply and demand, and the price can be cheap, but we've got to have low supply and we've got to have better demand at the moment. Probably in the merino fleece, with the lull of those prices, we've just got a bit of, dare I say it, oversupply at the current demand. Demand will improve as these economies, and particularly China's a big user of our wool. Their economies improve, and we could see an uptick in prices. And with the low US price, when that demand does arrive, it will react pretty quickly. But I can't tell you exactly when. Sorry, Alice.
Oh, that's all right. We'll forgive you for that one, I think, Andrew. Andrew Partridge from Michell Wool. Always great to catch up with you. We'll do it again next week. Thanks so much.
Cheers.